Good afternoon and welcome to the AASB website covering accounting for research grant. We thank you for taking the time to join us. Let me introduce you the presenters today. My name is Kathy Xu. I am one of the project managers here at the AASB. Joined with me today is our technical principal, Clark Anstis. And also we have Carla here to facilitate questions we may have. Carla is our technical director. Before we start, just a few housekeeping matters. I hope all of you can hear us and can see the slides. You should be able to see the control panel on the right-hand side of your screen. This is where you can put up your hand and ask questions. The slides will be available on our website after this session. Now let's look at today's agenda. So during next hour, we will reflect upon stakeholders' feedback and consider some of their suggestions. This includes clarification of deferral of AASB 15 revenue from contracts with customers and AASB 1058 income of not-for-profit entities in respect of research grants. Explanation why the board decided not to extend the capital grant accounting to the research grants. We will also go through the new not-for-profit income model, highlighting some of the key practical aspects to applying the model in accounting for research grants. We will focus on the areas where stakeholders' feedback have indicated significant divergent views. We hope that through today's webinar, we will explain to you how some of the fact patterns of the research grant examples in the illustrated examples and staff FAQs are assessed to determine the applicable standard as well as the accounting outcome, and what the accounting implication some of the contract clauses, such as the transfer of research information to another institution and cancellation clauses may have. We would like the session as interactive as possible, even if it is a webinar. As we move through the content, if you have any questions, please raise them. You should be able to see Ask Question section on right-hand side of your screen, and we will try to answer as many of them as possible as we move through the content. However, with such a big audience, that may not be possible. So if there are any questions that aren't answered, we'll come back to you offline after the webinar. So now let's move to the new model for income for not-for-profit entities. So what are the requirements applicable to accounting for research grants? In December 2016, the AASB released a package of standards comprising AASB 1058 income of not-for-profit entities, AASB 2016-7 amendments to Australian accounting standards deferral of AASB 15 for not-for-profit entities, and AASB 2016-8 amendments to Australian Accounting Standards, Australian Implementation Guidance for not-for-profit entities. These standards replace the existing requirements in AASB 1004 contributions, AASB 118 revenue, and AASB 111 construction contracts. This new income model applies to accounting for research grants. Under this model, a not-for-profit entity needs to assess whether AASB 15 applies. If not, AASB 1058 will apply. AASB 15 and AASB 1058 are applicable for annual reporting period commencing on and after January 1st, 2019. That means for many university and research institutes which have December year ends, 2019 calendar year will be the first year of application. For entities with the June year ends, the financial year ending 30 June 2020 will be the first year application. And we will explain to you the deferral a bit later. Now let's look at what the stakeholder says about the new income model in accounting for research grants. So Prior to introduction of the new income model for not-for-profit entities, accounting for research activities that are undertaken on behalf of grantor but benefiting the community at large was subject to diverse practices. So what have our stakeholders told us about the new income model and its application to accounting for research grants? What we have heard from the stakeholder is that the sector has encountered significant challenges in implementing the new model in accounting for research grants. They've told us that the not-for-profit guidance and illustrated examples have not achieved its objective to help the sector. They are concerned that the undesired accounting outcome may have negative impact on the future funding, research and innovation in Australia. They also have specific concerns about the interpretation of AASB 15 requirements, particularly around transfer of benefits and revenue recognition. Stakeholders from universities and research institutes that have December year-end told us that it's not realistic for them to apply the standards until significant divergence of opinion as to the application of the requirement have been addressed. Some of the stakeholders suggested that capital grant accounting specified under 1058 may be extended to pure research grants, and others asked for deferral of the effective dates of AASB 15 and 1058. So now, so why board decided not to extend capital grants accounting to research grants? So let's now first look at the capital grant accounting. Capital grant accounting is specified in AASB 1058 to recognize underlying non-financial asset, recognizable non-financial asset, and income as asset is constructed, effectively deferring the income over the construction period. In developing 1058, the board acknowledged that diverse practice existed in the accounting for research activities that are undertaken on behalf of the grantor but benefiting the community at large. The board decided not to extend capital accounting, that is recognition of a liability despite the absence of performance obligation under 1058 to research grants arrangements. This is because capital grant accounting applies to arrangement where the donor had intended to transfer a recognizable non-financial asset to the not-for-profit entities for use by the entity itself. In research grant scenario, as AASB 1058 paragraph BC 102 pointed out, a not-for-profit entity is provided a grant to conduct research activities with any detailed research data collected and right to any commercial use of the data retained by the not-for-profit entity. So AASB 138 intangible asset does not permit research activity to be recognized as an asset. The board noted that extending the capital grant accounting to research grant would create ambiguity in the distinction between a service and good, because many service contracts arguably give rise to unrecognizable knowledge and expertise to the service render, an incidental product to the service contract. It would also create confusion as to whether AASB 1058 would allow certain intangible assets to be recognized where their recognition is otherwise prohibited. Instead, the board decided to provide illustrated examples to help the users with the application. Examples were included in AASB 1058 and AASB 15 were amended by adding Appendix F with the further research grant examples. In response to some of the stakeholders' requests for the AASB to consider delaying the introduction of AASB 15 for the research sector until the significant divergence in view as to the application of the requirement has been addressed, so the board decided to defer the application, deferral of AASB 15 and 1058 in respect of accounting research grants. The deferral is for all the not-for-profit entities, and the deferral is only for the research grants. So the board decided to grant an optional deferral for periods beginning on after January 1st, 2019, but before July the 1st, 2019. that is to say, AASB 15 and AASB 1058 will still apply for other contracts within the scope. The scope of deferral is limited to research grants only, hence not a complete deferral of the standard to the not-for-profit entities with research grants income. So this is because the interaction of AASB 15 with other standards, particularly AASB 16. So the board decided it's too difficult to give the complete deferral from the standard. In addition, the board has not heard any major issue with other parts of the standards that would warrant a complete deferral of the standards. So now we'll move to the next section, and I will hand it over to Clark.
Clark, before you move on to your next session, there is a question from our participants. In fact, a couple of them are raising the question about the definition of research grants and whether, you know, there will be a definition of what is a research grants. Can you help provide some clarification on that, Clark?
Thanks, Carla, and thanks also, Kathy, for leading us into the webinar. Yes, the board did consider whether it was possible to provide a specific definition of research grant and decided that it was not really feasible to do so. So although the deferral will refer to its application to research grants, it will therefore be a matter of judgment as to which contracts fall within the scope of research grants. Now, bearing in mind that there's 4 or up to 7 examples of research grants in the examples attached to AASB 15 and to 1058, there's a lot of indication as to what research grants are. So we think that will assist people to determine what contracts they consider are within the scope of the deferral.
Thank you, Clark, for that clarification.
Very good. Thank you. Then let's address the accounting for research grants in more detail. The first decision that needs to be made is which is the relevant standard. Is it AASB 15, the revenue standard, or is it AASB 1058? So here on this side, on this slide, you see that there's a small flowchart which indicates that this assessment at the contract inception identifies 2 particular characteristics to consider. Is the contract or arrangement enforceable? And secondly, are there sufficiently specific performance obligations identified in the arrangement? If the answer to either of those questions is no, then the applicable standard is AASB 1058. So therefore, for AASB 15 to apply, you must have both an enforceable contract and secondly, sufficiently specific performance obligations. The reference to sufficiently specific was inserted by the AASB when it added Appendix F and further implementation guidance for not-for-profit entities, because we know that in the not-for-profit sector there can be some difficulties in identifying where there are performance obligations. So the application of either 15 or 1058 in the board's view appropriately reflects the economic substance of the arrangements. Each contract needs to be assessed in terms of enforceability and sufficiently specific performance obligations. It's not appropriate to try to make that assessment apply to a group of agreements or a particular type of agreement. Each contract has to be considered. If they have the same wording, that's fine, but it is a contract by contract decision. If there is no promised transfer of goods or services to the customer, the contract is subject to AASB 1058 rather than AASB 15. So the key message here is for AASB 15 to apply, there must be a promised transfer of goods or services to the customer, or in dealing with research contracts, the donor or authorised third parties, for the contract to be within the scope of AASB 15. Let's now move on to identify the features of enforceable agreements or contracts. So the standard does refer to contract, but the not-for-profit guidance does ensure that that reference is broadened to agreements of any type. So it need not be explicitly in the form of a contract. Of course, for any agreement, there must be acceptance of the terms between the parties. The agreement must make clear the rights and obligations of the parties. And for enforceability, there must be consequences for non-performance. So this is a very high-level summary slide which identifies the areas that need to be considered in assessing whether an agreement is enforceable. And just note that there is further guidance in Appendix F attached to AASB 15, explicitly paragraphs F10 to F18. So if we move on to the next slide, there are just a few comments there to assist you to consider the enforceability of the contract or agreement. I would refer you just to the section on acceptance of the term of the contract, and here you see there are different ways that a contract might be derived. Clearly the most obvious one would be a contract that's signed by both parties, but that's not a requirement. It could be that the contract is enforceable based on both parties relying on the contract once either or both parties start to perform under that contract. The consequences of failure to perform are important. Typically, a failure to perform on the part of the researcher, for instance, would result in having to refund any grant monies received in advance under a refund obligation or some other significant penalty. But the view of the accounting, of course, is that you don't recognise a refund obligation until such time as a breach of some type occurs, which makes the refund obligation then a present obligation. And note also that consideration should be given to any termination clause in an agreement. Now, as with any term in an agreement, it's important to identify whether the term is substantive or not. So a contract may indeed include a termination clause which, based on experience with that donor and other agreements which include that term, that although the contract includes that term, it is unlikely to be exercised by the donor, in which case the accounting would proceed in accordance with the terms of the contract that are considered to be substantive, and if termination occurs, then the accounting would of course change. So having determined an enforceable contract, the next question is, are there sufficiently specific performance obligations for the researcher under the contract? So here there are two very important aspects to that decision. Is there a requirement to transfer something of benefit to the donor or the donor's authorised third parties? So this is indicated on the slide by the transfer of goods or services. As you would know from the examples provided attached to the standards, the transfer typically under a research grants case really take one of three forms. It could be the transfer or the grant of intellectual property in respect of the research to the donor, and we have an example in the illustrative examples addressing that. It could be the provision of a license to the donor so that they can make use explicitly of that information, or secondly, thirdly, the transfer of research findings to the donor or authorised third parties. And so the question of transfer of research findings is the one where we have most examples and also have additional examples in the staff FAQs that have been published on the AASB website. I might add that with the board having made a decision to provide an optional deferral of the application of the standards to research grants until periods beginning on or after 1 July 2019, then the staff will be updating the staff FAQs which are presently published on the website. And we do anticipate that that update would occur early next year. So having determined that there is a requirement to transfer research findings, then it needs to be sufficiently specific. So the feature of sufficiently specific is necessary so that when a performance obligation is satisfied, that can be identified by the researcher, and that then is the basis for recognising revenue. So it's very, very, very important, those two features, the transfer of benefits to the donor or authorised third parties, and secondly, that the required transfer is sufficiently specific so that the researcher can identify when that is accomplished.
Clark, so very quickly, there is a question about here from one of the webinar participants that does the requirement to publish research findings constitute a specific performance obligation? So clearly, as you have just mentioned, it needs to be sufficiently specific in terms of what the requirement is. For example, the publication of the findings, it needs to be clear as to the nature and the type of findings and when and how they're going to publish it to meet the sufficiently specific criterion.
That's correct, and we do have an example where the agreement says that the researcher will publish any results really according to its discretion, and in that case we would say that the obligation to publish or to make available the data is really not specific enough to know when that is actually achieved. So it could be that it's not clear whether such a statement in the agreement would mean it's satisfied when there's one publication or one lot of data released to authorised third parties, or should it be six instances. So that's not sufficiently specific. Now it's important to note that although some of the examples refer to publication, that is not the only way to transfer a benefit to the donor. And indeed, when we have referred to publication, that doesn't necessarily mean publication of all the details. And so the new example 4D, which presently is in the staff FAQs, but the board has agreed to move into the illustrative examples, that does refer to the transfer of information to the donor or third parties in terms of de-identified data. So it doesn't necessarily mean that all the data obtained must be provided to achieve a transfer in settlement of a performance obligation. So the slide you're seeing here presently identifies the range of benefits that we have illustrated in the examples. So provision of sorry, let's just get to the previous slide. Yeah. So the intellectual property, the license of IP, or the research findings. The benefit can be transferred in a range of forms, and you'll note that one of the examples, 4A, refers to contemporaneous publication of research findings. That is only one example, so I just want to stress the way the examples should be used. The examples identify particular circumstances or features that may be present in the contract which will have consequences for the application of the accounting standards. But they do not mean that you can only have the outcome specified in the example if you have exactly the same circumstances in that example. So they are illustrative. You can apply them by analogy, but it's not the case that you must have exactly the example circumstances in order to achieve the accounting identified in that example. So one example addresses contemporaneous publication, another example addresses at least annual publication, and a further example addresses publication at the end of the research. So we have a range of examples which should assist entities to apply in their particular circumstances. The board does not attempt to provide the accounting outcome for particular agreements. That is up to others to determine. So the features in these examples should be applied as far as appropriate to the examples you're actually facing in practice. And just to note that under AASB 15, the approach is that merely undertaking research does not provide a benefit to anyone. So it does not provide a benefit to the donor. It is in fact developing the knowledge that the researcher holds, which is in effect an intangible asset of the researcher.
Clark, there's also, I think, arguments or views that, there are many other specific performance obligations that, the party that's performing the research is actually providing. So there, I'm seeing here one participant is raising the fact that they might be providing benefits in the form of seminars, workshops, or mentoring, and other similar benefits. But I think it just again goes back to the fact that that must be quite sufficiently specifically outlined in terms so that is one knows when that performance obligation has been completed or transferred or delivered.
Yes, Carla, that's quite right. That one of the requirements in recognising revenue under the standard is to be able to allocate the consideration to the performance obligations. So if you don't know how many seminars you should be or you are expected to present under the arrangement, or how many articles to produce, or how many people to mentor, if that was an explicit requirement of the arrangement, then you're unable to say what is the revenue that relates to the provision of one article or the presentation of one seminar, and therefore you don't have a reliable basis on which to recognise revenue. So that's why sufficiently specific is really important. And this slide just identifies a number of aspects to sufficiently specific that are set out in the Appendix F guidance attached to AASB 15. So I don't propose to go through these in any detail, but sufficient to note, I think, that an agreement, of course, can include implied or implicit terms, not just explicit terms. And so you see here that this slide indicates that a policy might be considered as part of an agreement, but it is important to be able to demonstrate that at the contract inception, both parties are aware that this policy is part of the agreement. And just to note in respect of some aspects of an agreement that might not be sufficiently specific, we did hear in responses to the board's fatal flaw review draft that one of the objectives in providing research grants to research institutions was to build research capability, to encourage the development of research infrastructure and innovation. Now, although laudable objectives, of course, we don't think that those would provide sufficiently specific performance obligations as the basis of revenue recognition. Right, if we then can move on. Let's consider some of the examples which are attached to AASB 15 in the first instance. Here we have examples based on the fact pattern you see there: 3-year enforceable research grant, the IP not transferred or licensed to the donor or authorised third parties. So the question is there a transfer of research findings? So attached to AASB 15 at present, we have examples 4A, B and C. The board decided at the meeting late in November to make some revisions to example 4A, some revisions to example 4B, and to add a new example 4D based on one of the examples in the staff FAQs. So you can see here, comparing these examples, that there's quite a range of circumstances covered. So 4A, contemporaneous publication of the research data as research is carried out. So in this case, you say, well, is there an enforceable agreement? Yes. Are the performance obligations sufficiently specific? Well, in this case, it's contemporaneous publication, so that is publication as the data is collected. And so in that case, that is sufficiently specific, and hence AASB 15 is the relevant standard. Example 4B differs in respect of publication of the research data at the end of the research. Well, again, there's a specific performance obligation to publish or otherwise disseminate the information to the donor or authorised third parties. Hence, AASB 15 is the relevant standard. Similarly, new example 4D, the research data is to be made available to the donor or third parties at least annually. And again, that's specific, so AASB 15. And also the scenario 1A and B from the staff FAQs. So the example presented is that the grant agreement does not specify whether and when the researcher publishes research findings or provides the transfer back to the donor or third parties. So in that case, there is no sufficiently specific performance obligation under AASB 15, and hence 1058 is the relevant standard. This slide includes some other notes that I think might be useful to you as you seek to apply the standards to agreements in practice. If the donor or third party has rights to access the data at any time, we think that's effectively equivalent in substance to contemporaneous publication. So therefore, example 4A might be most relevant. For an agreement that requires the data to be made available to the donor or third parties, in whatever time frame, then that does not require proof of access. What is necessary is that it's clear that the research data is available should the donor or third parties want to have that access. So it does not require that access is actually taken by the donor or third party. And we note here that in respect of existing contracts, clearly you would need to assess, are access rights included in the agreement? And that could be either explicitly or implied through reference to or knowledge of, for example, a policy of the institute or the university that identifies those access rights, being access rights that are in fact provided based on the previous practice. But if those access rights are not included in the agreement, then you should consider whether it's feasible to seek confirmation from the donor that in fact that access was contemplated in the agreement from inception, or otherwise it could be possible to modify the contract to include such access rights.
So Clark, one of the questions is about why we talk about, or rather why did the board introduce or talk about alternative use in example 4D and not in example 4A and 4B? And I think the reason for that is because in AASB 15, paragraph 35, it's about whether one fulfills one of the conditions 35A, B, or C in order to get the recognition of income over time. And in example 4A, the example that the board wants to demonstrate is that they meet the criteria of paragraph 35A, which is the simultaneous or contemporaneous transfer. So then you don't need to go further and look at the other two criterion. Whereas I think in example 4D, because the first two criterion are not met, then you go to see if the third criterion about the right to payment and alternative use is met or not.
Carla, yes, thank you. I'm very happy for you to ask the questions and also to provide the answers. That's exactly right.
Yeah.
And it'll be clear from later slides that these examples are set out to address those separate features of paragraph 35. So just to conclude with this slide, the reference to a new contract, if you're establishing a new contract with the donor, then it's important to consider what access rights might be included in that agreement in order to consider whether there are sufficiently specific performance obligations settled in that contract.
Clark, this time I will ask you one question, which I'll let you answer. I think you covered this in your presentation anyway. So this is with regard to one of the illustrative guidance, or in other words, the guidance that the board included in Appendix F. So the board had given there, an example to say a service can include an arrangement where one entity undertakes a service on behalf of another, and the examples of those activities include research. So I have here a number of participants to the webinar then asking the question, well, you have given an example of research as a service, and so I think we need to provide clarification to the participants as to why and how one would look at a service.
Well, that's a good question, and I think my response would be to say that the Appendix F does also include the statement that performance obligations do not include activities that an entity must undertake to fulfil a contract unless those activities transfer a good or service to a customer.
Yeah.
So as the researcher is undertaking the research, so yes, it's undertaking research activity, but that actually doesn't provide a service back to the donor or third parties unless explicitly there is something going back, a transfer. So I guess we can distinguish that quite clearly with a simple case of a cleaning service, where the cleaners cleaning the offices actually provide that service directly to the entity concerned because the cleaning is occurring on their premises.
Yes, Clark, and I think it would be helpful as well because some are also concerned that the standard seems to give a different outcome for a commercial body that is providing research services, and they are comparing it with the research grant type situation that we're talking about here. Can we maybe go into that to just explain how, when one is conducting research on behalf of a third party, which might be the case here as well in terms of research grants, in what situations one could satisfy the conditions in paragraph 35, any one of those conditions?
Well, we'll get to address those conditions, with some further slides. But I guess the question is, who is the beneficiary of the research that's being undertaken? right? So if basically you're a contract researcher and as a researcher yourself, you aren't getting any benefit from that research, then it probably could be equivalent to the cleaning service. But the examples that we have presented are where the research knowledge resides with the researcher, and in those circumstances, the question is at what point is there, or on what basis is there a transfer of that knowledge to the donor? So I think it'd be quite specific circumstances in which you could say that there is actually a continuous research service to the donor.
Thank you, Clark. So shall we move on?
We'll move on. Thank you. So the next slide, I think, covers some of what we've already been referring to. This slide just indicates how you assess at the contract inception whether you have an enforceable contract or sufficiently specific performance obligations. So just to note here in respect of scenario 1A that we refer to a license of research material does not transfer goods or services as the research material as we have defined it does not include the underlying research data, findings or publications. So if you're looking at the staff FAQs, you must look carefully at the definition of research material because that does not incorporate research findings. Okay, let's move on.
Clark, before we move on, since we were touching on the examples, there's also a question, and I think the board wanted to clarify this in example 1A and 1B in relation to paragraph B4 and about the need not to re-perform the service.
Yes, we'll get to that shortly.
Okay.
Thank you.
Good.
We won't forget that one.
Yeah.
This slide is just a reminder of the 5-step model under AASB 15 to recognise revenue. So we've addressed enforceable contract, sufficiently specific performance obligation. We aren't addressing transaction price or allocation in step 4. And so that leads us to the question of step 5 and revenue recognition.
Yeah.
Okay, so if we go to the next slide. This flowchart is based on flowchart 3 in the staff FAQs. It's essentially the same, except there's a few explanatory boxes which are in the flowchart 3 that aren't included here. So basically this flowchart sets out how you establish whether there's a transfer of research findings to the donor or authorised third parties. And so this diagram does address that re-performance question you asked, Carla.
Mm-hmm.
So if you start at the top left, AASB 15 paragraph 35A, you can attain revenue recognition over time if there is simultaneous receipt and consumption of the benefits by the donor or third parties as the research is being undertaken. And so one of the changes that the board has agreed to make to examples 4A and 4B is to remove from those examples the reference to re-performance not being required, and therefore that there is simultaneous receipt and consumption. Now, the reason for that is the standard does actually say that the question of whether another party would have to re-perform the work already done is relevant only if it's uncertain in the first instance whether simultaneous receipt and consumption occurs. And so that's the note we've added there, that the re-performance test in paragraph B4 must be applied in conjunction with the question in 35A. It's not a standalone test. And this is important because we know that under some research grants, if the researcher moves from one institution to a second institution, then the requirement is for all of the research data and information to transfer with the researcher to the second institution. So I know that some people have said, oh, well, therefore re-performance is not required by the second institution, hence paragraph B4 is enough to say that's recognition over time. Well, no, that's not the way that the standard should be applied.
Yep.
So that the transfer of the information to a second institution says nothing about whether re-performance affects the information provided to the donor or third parties. So the transfer of information to the second institution still does not provide anything to the donor or third parties. So let's move on. We'll address other features of this flowchart in further examples. Right, so here we're addressing explicitly some of the examples that are presented attached to AASB 15. 4A, contemporaneous publication, as the research is carried out. So let's start with paragraph 35A. Is there simultaneous receipt and consumption of the benefit when the research data is published contemporaneously? And the answer is yes, there is, because the research data, when collected, is published, made available. It doesn't require the donor to go and have a look at the website where this data is published. It doesn't require any specified authorised third parties to go and have a look. The requirement is that it's made available. So you can see there that on that basis alone, you say, well, paragraph 35A is met, and therefore under that arrangement, you have revenue recognition over time. Example 4B, publication of research data at the end of the research. So in considering whether 35A applies, well, there is no provision of information to the donor or third parties. So therefore, there cannot be simultaneous receipt and consumption of the benefits by the donor or third parties. Hence, 35A is not satisfied. And so then you move to 35B. Does the customer, the donor, control an asset as the research is being carried out? Well, again, nothing provided to the donor, so no. So then you're left to say, does 35C applies? And the example we have given is that there is no alternative use for the researcher, and there is a right to payment as the research is performed. That satisfies 35C, and hence you have revenue over time. Example 4C would be addressed in a similar way, and we have the new example 4D, which comes from the staff FAQs. So the next slide shows this process of considering the application of relevant parts of the standard for example 4D. Is there simultaneous receipt and consumption? Now remember, 4D is an example that says the research data is to be made available to the donor and third parties at least annually. Is there simultaneous receipt and consumption? No. Because until the data is made available, nothing is provided to the donor or third parties. Does the customer control an asset with reference to 35B? On the same basis, no. So then move to 35C. Does the asset have an alternative use? And we have said in this example that yes, it does. So that, of course, is always a question to be answered in the circumstances of the agreement you're dealing with. So we say, yes, there is an asset with an alternative use. And in this case, that means that paragraph 35C is not satisfied, and hence revenue recognition at a point in time. And the example 4D indicates at least annual making available of the data. So when the data is made available at those points in time, that is when you recognise revenue. So that's just an illustration overlaid on the flowchart from the staff FAQs how you go through the process to reach a conclusion. Right, if we continue with the next slide.
Clark, just before you go to the next slide, there is one question here about, well, if you publish or make the information available once a year, how will that be accounted for when there is no alternative use? I think it's quite, if it's once a year, then, and if it's a sufficiently specific performance obligation, then that would meet the criteria of then allocating the revenue to those performance obligations. So
that's right. So again, I think you would have a point in time recognition, because it's only at explicit points in time that you're actually satisfying the requirement to transfer benefits back to the donor or third parties.
Yes. However, from a practical point of view, if it's over 3 years and it's once of those 3 years, then it will be sort of a straight line allocation of point in time once every 3 years. Yeah.
Well, I won't say that it would always be straight line, but the point is that you need to recognise at those points the revenue that you would relate to the publication of the data at that point in time.
Yeah.
So if you had no basis for distinguishing the data publication at the end of year 1 versus the end of year 2 versus the end of year 3,
yeah,
then unless there were some strange circumstances, you would expect that that would mean the same amount of revenue at each of those times.
Sure.
And that's a useful thought, because that accounting based on annual points in time could in fact be very similar to the accounting outcome if you had revenue recognition over time. But it does depend on the circumstances. Right, this slide addressing contract costs is presenting the requirements in regard of AASB 15 to the costs incurred to fulfil a customer contract. So this flowchart really reiterates the requirements of paragraph 95 in AASB 15. And so although we don't have examples on this, we just do want to remind you that you should also consider the treatment of the contract costs. Paragraph 95 says if they're subject to another standard, then address them under the other standard. So if, for instance, the research is developing an intangible asset for the researcher and that's considered to be the major benefit of the arrangement, then you would consider that at least some portion of the costs incurred that would relate to that intangible asset would have to be addressed in terms of AASB 138, which requires research costs to be expensed. If however, the costs are generally referable to providing research findings to the donor or third parties, then the view would be that the treatment of costs under AASB 15 would be relevant. And then you see there the criteria under paragraph 95, which sets out whether you would be required to expense those costs or alternatively could capitalise those costs. And if they're capitalised, then they would be expensed when you are able to recognise revenue. So you would then need to establish also the basis on which the costs would be related to the revenue. There's also the reference to AASB 102. So the intangible asset standard does exclude costs that are developing an intangible asset for sale to another party. And in that circumstance, AASB 102 and its approach to work in progress for costs incurred would be relevant. So at this stage, all we're saying is please note that there are requirements under AASB 15 for contract costs that do need to be taken into consideration. Okay, if we move on to AASB 1058. Now, this is really just, I'm not going to go into detail with AASB 1058, but when it does apply, you would find the entity is recognising a financial asset, cash or a receivable. The slide does identify some circumstances as to whether you can recognise a financial asset for all of the receivable under an agreement at the outset, and you could do that if the contract cannot be terminated for convenience by the donor, or there are no conditions outside the control of the entity. So AASB 1058 starts with the entity recognising an asset, and then you say, well, what other entries would be required with this transaction? Essentially, that's what other credit entries might there be? Is there a financial liability? Is there a provision? And again, the comment there about a refund obligation. If you can avoid that because you're in control of how you spend the grant money, then a refund obligation does not give rise to a provision at the outset. Is there a lease which would give rise to a lease liability? Is there an owner's contribution? So the net result of this is presumably you would have a residual amount unless you happen to have debits equal to credits already. And that residual amount would represent income if it was a credit or an expense if it was a debit. And so under 1058, when the transaction occurs and 1058 is relevant, then typically you would have income or perhaps an expense at inception.
Mm-hmm.
So we have also examples related to AASB 1058. Now these examples we've identified on the slide is from the staff FAQs. So the similar fact patterns: 3-year enforceable research grant, IP not transferred, not licensed, and so we're left to say, well, is there any requirement for the research findings to be published? And in fact, in this case, in order to be within 1058, there is no sufficiently specific requirement for publication. So scenario 1A, the cash grant received up front, as the previous slide indicated, recognise cash, liabilities if applicable, and the residual as income upon receipt if you have control over the circumstances. Scenario 1B differs. Instead of receiving the cash up front, it also has it's an agreement that includes the grant monies being payable in accordance with a payment schedule that reflects agreed research milestones. And so here we think the accounting is distinguished according to whether the contract can be terminated by the donor without cause, and whether there are conditions outside the entity's control. So if the contract can be terminated by the donor and there are conditions outside the entity's control, then you would not recognise revenue for the full amount of the grant monies. You would recognise cash or receivable, liabilities that you might have, and the residual is income only when grant payments are received or expenditure is incurred. So in other words, you don't get upfront revenue recognition. And in the alternative case, contract can be terminated without cause and no conditions outside your control. then recognise the receivable up front, liabilities and the residual as income. Now we think, well, as I said earlier, the staff FAQs will be updated, and our plan is to have those updated early in the next year. The amendments to the standard, the board will be asked to vote on those amendments, and we should have the amendments published on the AASB website. Our expectation is later in December, and that will then formally include the amendments to the examples and the optional deferral of the standards in respect to research grants. So please stay tuned to the AASB website, the weekly newsletter, which is sent out every Thursday. If you have not signed up to that, then please go onto our website and sign up for that, because the publication of the amendments to the standard will be noted in the weekly newsletter, and the standard, of course, will be published on the AASB website. Thank you very much for your participation today. We hope that this has assisted you in some small way to consider how to apply the standards to the research grants that you are dealing with in practice. Thank you very much.
Thank you, Clark and Kathy as well, and thank you for everyone who participated. We didn't get to answer all of your questions in the time that we have, so Kathy will get back to you with responses to your questions offline. Thank you.